So one of the big things that comes to farming is, in addition to water, is also like land, right? And machinery and all that. And you know, they say when you go out to buy a piece of land, oftentimes they say the thing you want to do is maybe, you know, pay them what they want for it and work on the terms. You know, it's where you can get a better interest rate, in a sense. That people will usually negotiate that more than not. And one of the best places you can get good interest rates now, hopefully, is often through the Farm Service Agency. They're kind of the lender of first opportunity, they like to call it, instead of lender of last resort. But they kind of go hand in hand. If nobody else will give you, oftentimes, Farm Service Agency will do that. So what better way to get you introduced into that than to have Shawneen here, Stevenson. She's been with FSA for how long now?
25 years.
25 years. So she knows the ins and outs. Unfortunately, she's retiring fairly soon, or we don't know.
I don't know yet.
Still hasn't decided. Okay. So the good thing about it is any questions that you have, you know, you can get right from her in terms of how to get some of these low interest rate loans, because in reality, you know, a low interest rate loan is basically like getting a lower land price, you know, in terms of what you're bidding for. So, you know, and oftentimes the terms make a lot more difference than the initial purchase price in terms of what you have in terms of discounting it back, in terms of actual present value, and being able to make cash flow and whatnot on your payments. So, Shawneen, with that, you want to come and talk to us in any questions you have? Keep those for her as well, and I'm sure she'll be glad to answer them. Dan's here.
Good morning.
Good morning.
Can everyone hear me? Okay. I'm usually the fun one, and we play a little game called Arizona Ag Trivia, but because of the COVID and things like that, I'm not going to do that this time, because I like to be a little bit more interactive and walk among you and this and that. So for that reason, we're not going to do that today. But I'll still try to be as fun as I possibly can. Let's start, and let me just ask a couple questions of everybody. How many in here have ever heard of FSA or Farm Service Agency? Okay, well, you two don't really count. But I'm sorry, how many others? Okay. And have those that have heard of FSA, have you had any experience with FSA? Have you received any program benefits or? Okay.
Not yet.
Okay. All right, well, we'll start here with just kind of a brief. There we go. Okay. So FSA, we are basically Farm Service Agency. We like to use a lot of acronyms, but we call ourselves FSA. When I started with the agency many years ago, they were ASCS, Agricultural Stabilization and Conservation, something. And then they went to something else and something else. So we've been FSA since, I think, 1996. So we are what was, my portion is anyway, the loan portion. We were the formerly what used to be like Farmers Home Administration. But in 96, when the agency split, Farm Service Agency, FSA, we took the farm loans, and then there was another agency that was created called Rural Development. They took the housing loans. So that's where the split came in. But basically, we're umbrellaed under USDA, the Department of Agriculture. And my program, there's two sides of the house. There's the farm loan program and then just the farm programs. Farm programs, they are the ones that administer the farm subsidy program. And some of you that do start farming and are farming, Gina, I know that you said that you're currently farming. If you go into the office and or right now you can't, but if you call the office and get with the farm program girls, sometimes there's some farm subsidies, ad hoc disaster programs, those kind of things that you could benefit from as well. But you have to be signed up with that side of the office. You're required to certify your crops, basically, you know, where you report what it is that you have planted and those type of things. And it's not, there's some other benefits as well, and I'm not the expert on that, so I'm not going to talk about that. But I just wanted you to be aware that there are two sides to the house. Basically what I do is I administer farm loan programs for kind of the central and southern portion of the state of Arizona. I cover Pima, Pinal, Maricopa, Yuma, or I'm sorry, Pima, Pinal. I used to cover Maricopa and La Paz, but I don't anymore. I do Cochise, Graham, Greenlee, Santa Cruz counties. So I have the southern portion of the state. Where is everybody in here from Pinal County, or do we have people from other areas?
Maricopa.
Maricopa, yeah, I used to do Maricopa, I don't anymore. There's a good group there, though. Angela Roberts is the farm loan officer there, and she's the one that oversees everything that goes on there. She's really good. Her assistant, Linda Sugarlia, she's good too. So, anybody else?
Yeah, I'm in Gila County, so Holbrook, probably.
Yes, Holbrook. Harriet Mann and Paula Bain are the loan officers up there. Shelby Johnson is the CED there. She does the farm program side. Anyone else?
Cochise.
Cochise, I oversee those farm loan programs in that area, but I actually have two farm loan officers there. Sal Camarina and Rebecca Burright are the two farm loan officers there, and then Sherry Binger is the county executive director. She's the one that would do farm programs. Anyone else? Okay. If at any time there's any question, there's a website that you can go to, the farmers.gov website, and you can search on there to see who would be the official that you would contact in the office in the area which you would contact about any questions or apply for any benefits. I'm computer illiterate. So, if you're a farmer or rancher who you're unable to obtain credit elsewhere, and as was said earlier, we had the moniker of being the lender of last resort. I like to think of us as the lender of first opportunity, because we're here for those people that either they're struggling, they've fallen a little bit, they can't get credit elsewhere, and that happens in today's economy with the price of agricultural commodities and things. Or we're here for those that are just starting out at the beginning, farmers and ranchers, those that are unable to obtain credit. Banks and lending institutions are a little bit reluctant to make loans to someone who doesn't really have any farming history or any financial history as far as receiving any income or anything from any crops or livestock type operations. Generally, they want to see about 3 years worth of history. FSA is kind of like we're kind of filling that period. We can help you achieve that 3-year history so that you can go on to a commercial lending institution. We're not here to compete with the banks and lending institutions, but we are a source of temporary credit to get you up, get you running, get you started, and then graduate you onto commercial credit. And eventually, people outgrow us. Once we get them started and everything, get them up and get them going, and then they can pretty much outgrow us. If they want to expand or enlarge their operation, then they move on to commercial credit. We have several different loan products, and we'll go over those just a little bit. Everybody has a handout there, and on that front page, it basically is an overview of all of our loan programs, the limits, what the loan funds can be used for, so on and so forth. Farm ownership, they recently increased our limit is up to 600,000 and farm operating is 400,000. Let's see, the direct emergency loan, that one only comes into play in the event of an emergency. It has to be an actual declared emergency, either by the Secretary of Agriculture, President of the United States, something like that. We've had those in the past for wildfires down south, the ranches and stuff a couple years ago that burned down south. We've had them for floods, so on and so forth. So that only comes into, we can only, if we have a disaster declaration is the only time that we can do a disaster loan or an emergency loan. We also have the guaranteed loans, and that is whenever you've outgrown us and you go to the bank, the limit on that's $1,776,000 for this fiscal year. That's kind of like the in-between step. That's between us and actually the commercial lender. Sometimes they want a little bit of a guarantee to shore things up. And we guarantee that loan in the event of a loss up to 90%. So it's an attractive product for a bank or lending institution. But what I'm mainly going to focus on today for everybody is the microloan program. That one is geared more toward the smaller type operations. It's a loan of $50,000 or less. It doesn't require the amount of experience or paperwork that our regular loans do. So it's a simplified application process. If you don't have any experience we can consider you, if you have a mentor or someone who will guide you through that farming operation. And we've done that a lot of times with some of the smaller operations. Is there anybody in here that would, well, I don't really know. Can we just, how many people, let's see, we've got some vegetable operations, we've got livestock. Anybody have livestock? Okay, what type kind of livestock? How many?
How many? Sorry, right now there are 4 animals in the breeding animals there.
Okay, so do you feed them for, or do you raise them for, do you sell them as breeding stock or for meat? Okay, all right, anyone else? What do you have?
Well, we'll have 6 horses, we have 4 now, we have pigs, I've got goats coming, and chickens and turkeys.
Okay. Horses aren't really an eligible loan purpose for FSA. FSA is basically we loan on anything that is food or fiber related. So if the goats are going to be used for meat, or you're going to use them, you're going to sell them as breeding stock, you know, for meat or something like that, then that's okay. A lot of times I get questions on roping steers. We don't do roping steers because that's considered to be recreational, and we don't do roping steers. Even if you tell me that you're going to eat them later or sell them for meat later, yeah, no, we don't do roping steers. Sorry. This loan program, I don't know how many years it's been in effect now, but it's been several years. But it was created to basically assist the smaller growers, the ones with the niche markets, and basically just the smaller growers in general. It's not meant for the big people like Pigs for Farmer John or anyone like that. It is basically tailored for the smaller growers, which I think a lot of you in here, that's basically why you're here. And I would encourage anyone, if you are going to start an operation, that you really do start small. One, you don't want to take on that much debt. If your first year things happen that you would never even think about happening. And sometimes things don't work out the way that you plan, as we all know. So it's always best. I always encourage everybody not to take on a lot of debt your first time out. We can work with you and work through that process, and you can build to a larger operation, but you want to make sure that you have, your operation is scaled small enough to where that you can handle it and you don't overextend yourself, I guess is what I'm basically trying to say. It eliminates the use where a lot of people provide or get their farm inputs through credit cards, which if you have a 0% interest credit card, that's great. But with credit card interest rates of 18%, 20%, 15%, you can't really afford to farm like that. The margin in farming is really tight anyway, and you really can't afford to spend that extra money on paying for that. This is a list of expenses that you can use the microloan funds for. So the operating funds can be used for your initial startup costs, annual expenses such as seed, fertilizer, utilities, land grant, marketing and distribution expenses, your family living expenses, your purchase of livestock equipment, and anything else that you need that's essential to the operation. Farm improvements, such as fencing, you can do a well, those are kind of expensive depending on where you're at. Hoop houses, irrigation. We can do vehicles, but I'm kind of leery of doing a vehicle because there's some program requirements with that. It has to be used pretty much 100% of the farm. And right now, some of the finance companies, they always offer 0% interest on farm vehicles, so that is probably a better way for you to go. Ownership, there's also ownership money in the microloan. You can use that to purchase a farm, any capital improvements that you may have. Soil and water conservation, a lot of times people need help with ditching or leveling, which someone earlier talked about using the EQIP program, which is through NRCS. That's a great program to use because that is a cost share program and we can assist with the cost share. I don't know exactly, and maybe you can help me. Do they do 90% for beginning farmers still? Yeah. So they'll do 90% and the farmer's responsible for 10% for a beginning farmer. But in that, under that program, I believe you have to have irrigated the land 2 of the last 5 years. Out of the last 5, yeah. So again, there's some caveats to that program as well. Let's see, loan closing costs, and we can also refinance bridge loans. Does anybody in here know what a bridge loan is? Okay. Sometimes we have an issue with funding because our funding comes from Washington, D.C. Our fiscal year end is September 30th, and there's always a lag there between the time that the fiscal year ends and our funding gets in place for the following year. Lately, it hasn't been real bad, but I've seen the times whenever we've waited 6 months or more for loan funds to come down, and it's all contingent upon the budget. So unless there's a continuing resolution signed or a budget in place, sometimes we don't get loan funds. A bridge loan is basically if there's someone out there or a lender or something and you're in dire need of getting that real estate transaction closed or you're going to lose the deal. And if someone comes in and says, okay, I can do a bridge loan for you, basically that loan is the bridge between that closing date and us getting the loans funded. And in that case, you can go ahead and do that. And then we just basically, when we get funds and the loans closed, then we can pay off the bridge loan. I've only used that once, I think, in my 25 years. It doesn't happen a lot, but there is always that possibility and it can be used for that. There are some eligibility criteria as far as the requirements for the applicants. You have to have an acceptable credit history. I can't speak for all loan officers, but I've been doing this a long time, and I know that sometimes life happens, things happen. Sometimes there's things on your credit report, there's some blemishes, there's some things that have happened that are beyond your control, and I understand that. So we work with each individual applicant to see what it is that's on there, and if there's a reason that is truly beyond your control, Now, someone who just flagrantly doesn't pay their bills at all, ever, that's a different story. But if there is a illness, car accident, job loss, especially now with this COVID thing that's going on, we do understand that things in life do happen. There are life events that do happen. So we do work with you on that. So it doesn't mean that you have to have stellar credit. We don't even look at a credit score. We focus more on the repayment history and repayment ability. You have to be unable to obtain and get a turn down letter from a bank or lending institution. I've been doing this a long time, and if I look at your, whatever your history is and what you give me as far as a financial statement, assets and liabilities, I can generally tell whether or not a bank would be willing to do the loan. I have a relationship with most of the bankers in my area, and so I know what it is that they would take as far as loan to value, debt to asset ratios, that kind of thing. So I don't make you go do that. But again, credit history and criteria is up to each individual loan officer. So I can't speak for all loan officers in all areas, but that's the way that I do things. You can't have any federal debt, be delinquent on any federal debt. If you have, the other thing is child support. If you owe back child support, we typically can't do anything with that unless you've entered into agreement to bring that current or you pay that off in full. IRS debt, as far as tax debt, if you're making payments on, say, from 2 years ago, you owe $5,000, you didn't have the money to pay it, but you entered into an installment agreement with the IRS. Provide us the paperwork, show us that you're making the payments, and we'll move on down the road. If you're not, if it shows up as federal debt, student loan debt is another one. I had one the other day that showed up as delinquent student loan debt. Because we run everything, we run the social security number through this database, and it'll come back and it'll tell us if there's delinquent federal debt. They don't show up very often, but I did have one the other day, and it was delinquent student loan debt from 2010 or something like that. But that's just the thing, federal debt sticks with you forever, so it'll always show up. We had to address that. You have to be the owner-operator of a family farm, tenant operator of a family farm. By family farm, we mean not exceed, obviously 10,000 acres. Could be a family farm if you have a farm, if you have a family of 10. So again, that's just one of those, it's one of those things that we look at to see the individual operation and the individuals that are involved. And you have to have sufficient managerial ability. Hopefully you'll get that from this class. Dr. Tronstadt's really good, and so is Lene. And I have had a few people that have come to me that have completed this class. And this is a great class. It really is. I attended a few sessions and I've been really impressed with the things in the curriculum. And like I said, Dr. Tronstadt's really good. Not to mention that, I also attended the U of A, but I'm not biased. With the managerial ability, we can take that a number of different ways. With the ownership program, you have to have a minimum of 3 years worth of experience, but we can take a combination of things. You can either have your own farm or ranch for 3 years, and have tax records or financial records to show that you have been productive. We can take, if you have been in a past life, 4-H or FFA projects, those kind of things. We'll take that into consideration. If you've worked for someone on a farm or a ranch, or you've been in an apprenticeship program or something like that. So there are a number of ways to get to that 3 years worth of experience. I always have people, whenever they call, and they'll question me, well, how am I supposed to get that 3 years experience if you won't give me a loan? Well, we take a look and see what your history is. Let's say that you've worked for someone on a farm or ranch, and you've had responsibilities as far as, planting schedules, irrigation schedules, you've managed employees or something like that. Not only that, if there's you have any service history as far as being in the military, we can take that. If you owned your own business, we will take that into consideration. So there is a number of ways that we can get to that actual 3 years worth of experience. It doesn't necessarily have to be all in operating your own farm. We also have a youth loan program, and we have quite a bit of activity in that actually, and that's for kids that are in 4-H and FFA to finance their livestock or their livestock projects, their animals, things like that. Those loans are up to $5,000, and we basically can finance the purchase of the animal, their feed, that kind of stuff, and then we get paid back when they sell the animal at the junior livestock auction. Here in Pinal County, I believe that's in March, and it's in conjunction with the fair. I don't know if they're doing the fair this year, and last year they had some kind of a virtual sale, which didn't go as well as it usually does whenever you actually have the sale, live sale with people there. But I don't know when Maricopa County is, and I don't know when Cochise County is, their fairs are, or when their livestock auctions are, but that is an option. So if you know of anybody that might be interested in that, have them contact. We'll also you have a minimum of 16 hours of credit from college or post-secondary education. A lot of times we have people that have a degree in agriculture, some kind of agriculture. We'll consider that as part of your experience as well. With all of our loans, they have to be at least 100% secured. With an annual operating loan, we consider the crop to be 100% security. It has to be some sort of income-producing commodity. So a garden for your own personal use wouldn't qualify under this program. It has to be something that you would be selling or generating revenue from. I have a number of people that have inquired about growing organic produce for CSAs, which indeed would be an eligible loan purpose. But again, you have to put together a business plan, a budget, which I don't know how far you are in this class. Have you gotten to that portion of this class yet, as far as doing a
We
business
touched
plan?
on it, but they will get it back.
Okay, so that will come. And that's actually really good too. I sat in on that class 2 years ago, I think it was, because you didn't do anything last year, right? Or I wasn't here last year. But that's really, and again, I can't say enough about Dr. Trunstead. He's really, really good with that.
Shawn, would you mention that you have used, they're all wanting to know what their certificate is for when they graduate?
Yes, I'll get to that in just a sec. Let's see, we take up to 150% security when it's available. So in that instance, let's say that you are requesting loan funds to buy a breeding herd of, let's say, cattle. And that herd is worth, on today's market, that herd is worth $70,000, but your loan is only for $50,000. We're still going to take all livestock because we can't really separate those out. You can, as far as ear tags and things like that, but ear tags fall off, things happen. So we would take all livestock in that instance as security, even though it's more than the $50,000. And that's not uncommon. Banks do it as well. Generally, a bank's loan to value, they want, they'll only loan they will loan 60 to 70% of whatever the loan request is for. We'll loan 100%, but we want it secured up to, well, we want at least 100% security, and we'll take it to 150%. So, on an ownership, we finance the lower of the purchase price or the appraised value, and that's always has to be 100% of whatever the loan is. And again, it's for the smaller operations, it's to help you gain the experience that you need to move on or expand the operation if you choose to, or just to get you to the point where you're self-sufficient and you can basically finance on your own. We do have a borrower training requirement, which the certificate for this class fulfills that borrower training requirement. We have both a production and a financial management requirement. Again, you complete the course, you get the certificate. I consider that to be completion of borrower training. It's not to say that down the line, you're going to need a little bit more, you're going to need to brush up or whatever, but you need to be able to keep a set of books, you have to keep, and they don't have to be fancy. It has to, I've had people keep records in a spiral notebook as long as you keep track of all of the cash inflows, cash outflows of your production. I don't really care how you do it, but you have to keep records. Because if you don't keep records, you don't ever know where you're at. It's bad management not to keep records. Let's see, there's the website there for get any information off that website. There's also the contact numbers for your local office. There's a place in there where you click on the state and you say what county it is that you're in or your operations in, and it'll pull up who it is to contact. Yeah, I think it's also at the bottom of all those fact sheets that you guys got. The first one is the loan information chart. The second fact sheet is just an overview of all of our farm loans, what the money can be used for. And then the last one is specifically the loans for beginning farmers and ranchers. There's some information on there. But there's also, it also gives you the website on there, the farmers.gov and things, those websites. There's also some good information on there, and if you contact us, at least my office, and you request a loan application packet, there's also some other links that Terry, who's my loan analyst, she'll send you. And sometimes there's different grants and things that are available from other agencies. FSA, we don't administer any grants, but there are, rural development does have some grants sometimes for organic production and things like that. So we generally know about it. We try to keep up on what's available from other sources for you, so we try to provide you with that information as well. If it sounds like something that we can't do under the loan program, then we figure out, or we try to find someone that can do it for you. So we try to be as helpful as we possibly can. It's been a little bit difficult because of the COVID, and I pretty much worked at home since last April. So it's been a little bit challenging, but we are able to get our phone calls and email messages and things like that. So, like I said, we'll do what we can to help you out. And that's it. Questions?
Yes. Would being a Schedule C independent contractor weigh at all into the managing experience?
It depends on what it was that you were doing. We look at it on an individual basis, so it would depend on what type of contracting you were doing.
Because basically that's running your own business.
Yeah.
And I understand what you're saying, it's case by case, but
Yeah.
there's a possibility that.
Yes.
I have a couple of questions. Number one is, do you have a minimum size area to call your farm? Like is 1 acre a farm?
It could be. I did a 1 acre strawberry farm, or I'm sorry, 2 acres strawberry farm in Yuma 20 years ago. And I didn't think that that would really be much of anything, but 2 acres of strawberries is a lot.
Yeah.
So it just depends on what the commodity is. Basically, what we look for is to see if whatever it is that you grow on that 1 acre will generate enough income to repay the loan. Just because the loan amount is up to $50,000 doesn't mean that that's what you absolutely have to borrow. There is no minimum loan requirement. So if you need $5,000 for whatever, that's certainly an eligible loan purpose if that 1 acre farm can make the payments on that.
Well, what if I'm looking at an acre that's basically, most of it's a mature pecan orchard, irrigated, and just, let's say it's $100,000 purchase price. And I've got $30,000 in cash, say, and if the numbers work out, could I get a microloan for $50,000 of that $100,000 and would you allow the seller to carry back a second mortgage on the 30 or the 20,000? You allow a seller to go behind you?
Yes, FSA has to have first position.
Right.
And there are some terms and requirements that a second position seller would have to adhere to. But in that particular case, I would suggest that you go with just a regular loan.
Oh.
Because the regular loan, it's the same interest rate for the microloan or a regular loan. The regular loan could do 100% of the, we could do up to 100% of the purchase price or appraised value. So if the purchase price is 100,000 and the property appraised at 90,000 or 90,000, then since you have the additional money, you could probably make up that 10,000 that you were short. We also don't, you would also need to pay the closing costs in that aspect. But that's the direction that I would tell you to go.
And when you underwrite those loans, is all the income from the farm income, does that have to cover the entire monthly payment for the loan, or can you use other, other income that I have from other sources? You include all that when you underwrite it?
They changed the requirement just recently, and basically, yeah, the income from the farm would have to cover the payment.
Okay.
It would have to cash flow with just the income from the farm. Now, FSA, our farm ownership, our regular farm ownership loan, we can amortize up to 40 years. But again, they changed the requirements just not very long ago. We can't automatically go with a 40-year term. We have to start with a lower term and then basically determine when we get to a cash flow that's equal to 110% or 10%. So if it cash flows at 20 years or 25 years, then that would be the most that we could schedule that payment out. But our interest rate's 2.5%. And how many acres of pecans?
Just one.
Okay. And how old are the trees?
Oh, they've got to be 40 years old.
Oh, wow, okay. And were you going to replat, or were you going to
Well, I was going to, harvest the pecans, and then also some of the land that's cleared, because the trees are 100 feet tall, so it's shady. So I'm limited to what vegetables and other fruits I can grow there. But I would grow organic vegetables on that and add it to my other. I'm just adding that piece of property to my other operation as an organic vegetable grower.
So you
I'll
have-
buy that acre.
Okay, oh, all right, so you have other acreage
Well,
that's...
I have some land that I own and then some that's leased, but some of it's leased. I lease another acre for $10 a year.
Okay, but you have other land, you have other income from other food or fiber.
I do.
Oh, well, then in that case, you'd be fine as far as covering the payment.
Oh, okay.
Because we would take your operation as a whole
Okay, so
and
it
look
doesn't
at...
have to really stand alone. It can go.
Right, if that was all that you had or all you were going to buy was just that 1 acre, then it would have to be able to, I couldn't take like income from a non-farm job or something like that to cover that. But if you've already got an existing operation, you're just adding to, and that, all of that income would cover that payment, then you're fine.
And you touched on credit. You said, I know underwriting is sort of an art form. But do you pull all 3 credit bureaus and
We
look
do,
at them?
yeah.
And so you just determine. Now, if you have a 720 score, or
I don't
better-
look at credit scores.
Huh?
We don't look at credit scores at all.
Okay, but say a 720 is a good score. So, that would mean I would have good credit. You give that a much more favorable underwriting decision. Like, could my debt to income ratio be higher if my credit score was, or my credit was better?
We don't really look at credit scores like that, not like
Okay.
commercial lenders. I'm a little bit more lenient, maybe, than maybe some other loan officers, but I look at the overall picture. I don't get hung up on the debt to asset ratio. We don't look at credit scores at all. I mean, it's just and it's a loan officer's call, basically. So I can't really give you a definitive answer on that.
Yeah.
I'm sorry.
I know, well, there's a lot of moving parts, when you do these loans.
Well, there is, and it's, like I said, I look at the overall picture of what, the scenario of what this is, the end product, the big picture. I guess I'm a big picture girl. So,
Okay, thank you.
you're welcome. Yes.
If I may let you piggyback off your pecan orchard acre, would a microloan be something that could cover the cost of leasing? Let's say your pecan orchard sections of it maybe to run a small group of pigs on for a small amount of time, say 2 months to rotate them back and forth to 10 different homes. Would that cover that lease, or do you have to be the owner of that?
No, you don't have to be the owner.
Okay.
And again, if a lot of times if you need to get that 3 years worth of experience to qualify for an ownership loan, I suggest to people that they find property to lease to get that 3 years. So it could cover the lease, yes. Yes, sir.
Does veteran benefits come into play, or can you use the veteran benefits as far as the loan?
Well, there isn't a separate pool of, there isn't a separate loan process for veterans preference. But where that comes into play is if we get down to the point where that we have limited funding and we have a veteran with a loan request that's approved and we have a non-veteran with a loan request that's approved and we only have money to fund one or the other, the veteran gets funded first.
Thank you.
But as far as having a specific program for veterans, we don't. It's all the same program. It's just on the application, there's a portion there for you to fill out if you have served with service dates and things like that.
Yeah, years ago, when I got my first house, I was approved for up to, I think, $450,000 loan, or guaranteed loan, I should say, veterans loan, for a house. Luckily, I fell into a nice one, which was under $100,000, so I didn't have to go to that top level of $450,000. And I was wondering if, again, if that benefit, if I get approved for a loan, and again, with the quote-unquote guarantee that you need up to 150%, would that play into, would the veterans loan play into that guarantee?
No, because that housing's different.
Oh, okay.
Yeah. Housing is different. I don't do housing, and housing is different than farm and ranch loans.
Okay.
Anyone else? Okay. Lene knows how to get a hold of me if you need anything. Again, use the website. Thank you very much.